Hello everybody, welcome back to the breakdown and welcome back for my second video discussing precious metals. This particular playlist is specifically for precious metals and breaking that down so that it's understandable. Again, this is always just my personal opinion in many cases. I do share some facts. And it's just my experience of over 10 years stacking, essentially. In my previous video, if you didn't already watch that one, we discussed what real money is. So if you haven't watched that one, probably a good idea to start there. But if you have already, we're going to move on to understanding why precious metals are not investments. And hedges against the devaluing of world currencies. And some of the implications that can come from having precious metals and exactly what differences you might be able to find with the different precious metals. Now, just got this one open already, and I'll leave this for a little bit of suspense. My idea is to bring out a new coin for each video and slowly reveal some more of my stack. I'm quite proud of the stack that I've got going. As I say, 10 years is quite a long time to be able to do that. So, but I want to talk about, as I said, why precious metals are not investments, and people get a little bit stuck with that. I certainly did very early on. I had kilograms and kilograms of silver back in 2011, 2012, and the price around that time was, in Australian dollar terms, pretty stable, pretty well where it is right now. Obviously, in that time, the currency, the US dollar to the, I'll just adjust this camera a little bit, excuse me. The US dollar to Australian dollar was very different. So that kind of played a bit of a part in it. At the time, perhaps the US dollar was a little weaker. So, but anyway, I'm going to be sharing stuff in terms of US dollars because that's what it's all priced in. That's the main world currency. So we'll do that. But I am Australian, so I have to pay for these things in Australian dollars, which can be a little bit tricky when we're dealing with that, because the investment world impacts on the purchasing of precious metals. And that's where the crossover comes, and that's where some of the confusion comes. But anyway, so let's have a look. I just want to draw some conclusions here firstly. So I've got the details here on my laptop. So back in, let's have a look here, 2009. So we're talking just post crash. We had the 2008 crash. 2009, things were pretty lean. And gold and silver had gone, well, gold here in US dollar terms had gone up to about $1,000 according to this chart, and at the same time silver spiked up to 20. Around 2009, silver basically halved and went down to 10 US dollars an ounce. Again, this is a fairly zoomed out graph of the last 15 years, so it's just gone and wiped all the details for me. I'll have to refresh that. There we go. And then what's happened, of course, is we had the 2011 spike. The 2011 spike in silver went all the way up to its highest ever price. Let's have a look here. No, it didn't. Silver's highest ever price is still 1980. I'm wrong there. It certainly zoomed right up there to almost sort of $50. Didn't quite get there, but this chart shows it almost did. And in that same time, gold went up to $1,800 US an ounce. So that's a bit of context there. But let's move a little bit closer in time. Then we had the big drop down, 2015, 2016, pretty low there. And that's actually where I sold quite a lot of the silver that I'd bought 3 or 4 years earlier. And that was my first mistake, I have to say. And that's because I bought it thinking it was like a stock. Because I was a share trader, share investor, before I was a precious metals holder, stacker. But obviously during that time did a fair bit of research and said, hey, hang on a minute, the dollar's pretty much done. And it was even pretty much done then. So just imagine how far along that track we are now. So then... so we had the lull there. We came back down to about $1,100 an ounce in gold US, and we were around about the $15 mark of silver. So as you can tell, we came off maybe a bit over 30% in gold, but we came off like 60% in silver. So as you can understand, gold is a little bit more stable. It's still volatile enough over time, but its trajectory generally is up, whereas silver goes, it's crazy. Gold makes a move and silver just spikes hard up and spikes hard down. And that's important to understand and keep in mind, because let's zoom to now. As of now, remember I said before that gold in 2015, 2016, around that time was 1,100 gold. In 2011, it was 1,800 gold. And then silver, 2011, it's like 45 plus, spiked up to there. That's silver, US dollar terms. And then in 15, 16, it was at $15. Okay. Now, what we're looking at right now is gold is at $1,721, or almost $1,722 US currently, right at this moment. And silver is $18.57. Now, I may talk a little bit about gold-silver ratio, but I probably won't worry about that today. But just essentially understanding that based on, if we go all the way back to 2009, let's have a look at 2009. In that time, pre-big spike, we'd managed to basically double. Before everything kind of went crazy, it was like $600, and all of a sudden it was $1,000 in 2008 at the height. And silver, kind of doubled. But then in 2009, we've got sub $800 gold, and we've got just a touch back down on $10 silver. So easy to work out, 80 to 1. Then we've got gold has gone from 800 to 1800. That's a good enough analogy. We'll just say that. And in that time, silver has gone from $10 US to $18.50 US. So we've got easily more than we've got. What have we got? 100 and well and truly more than 100% on the gold over that period of time. It's well and truly more than doubled, and we've got 80% thereabouts on silver. And it's important to understand that if I was able to show you these graphs, I'm not showing you these graphs, but actually let's just bring it over and I will give you a quick look at it. So see if it'll focus for me. There you go. That's the charts I'm looking at. So which one over that period of time would you have been more happy to own? The gold or the silver? Gold's gone up substantially more and far more reliably, and silver has not. So that's why I stated in my previous video that gold is money. Now, so is silver, and so is platinum. But there's a difference. Silver you can kind of trade if you want to. Gold, not so much. So gold as money is your long-term savings type deal. Doesn't really go down much. Its general trajectory has always pretty much been up. And so putting some away in that and holding it as a longer term savings account, that's gold. Now, silver, you can have more of the product for less, obviously. I mean, at the moment, we're talking, if these were just generic ounces, I've kind of given away that this is silver, but generic ounces, we're talking at least 90 of these. Well, this is a 2 ounce, but let's just assume it's a 1 ounce. 90 of these, or 90 plus of these, to buy one of these if they were generic ounces of gold and silver. And as I said before, when it was about 800 and what did I say? $810, so 800 for gold and $10 for silver. It's 80 to 1. Now it's over 90 to 1. It has blown out in 2020, I think, when we had that huge spike. It blew out to well over 100, like 110, even maybe 120 to 1. So gold has gone up substantially more over time than silver. Now, silver, as I say, if you wanted to buy it at a low, but then you needed to pull funds out for a purchase, because, as we say, it's your savings, then by all means, it's probably the silver, depending on when you're wanting to sell. But silver's likely to be the one that you would probably do that with. Again, in my previous video, I've said I'm not going to name channel names, but there's one in particular that I have watched for quite some time. I'm no longer a subscriber of theirs, but I still do get recommended their videos sometimes, where they were quite patronizing and a little bit aggressive towards people for selling their silver, or suggesting that, oh, it's got to the low now, what are you going to do? You're going to sell your silver. It's important to remember that while we're doing these savings things, we all do need money to be transferred into currency at times, because times have been tough. Inflation's out of control. And so some people are going to need to sell their silver, and it's no good peppering people from the sidelines when it's not your life, and you're peppering them from the sidelines and saying, hey, well, what are you selling your silver for? You bought it for a reason. It's your savings, blah blah blah. What did you buy it for if you're just going to sell it? I mean, that's quite a silly kind of thing, but people do think like that, and obviously Some channels out there do think like that. The thing is, that's what it's for. It's to save your money. And okay, it went down and they had to sell it. These are unprecedented times. People have lost jobs, lost work, can't go back to work for various reasons. Inflation's gone crazy. But here's the thing. If they didn't buy that silver, they may not have had the savings in the bank. And their best option is to sell the silver. So it's not panic selling. It is selling because they need to. There are going to be some that do panic sell. When I sold a lot of my silver in 2015, it wasn't a panic sell. It was to invest that money into the share market. It was a bit of a mistake because silver did spike up into the plus 30s over here in Australian dollar terms, and hang there for a good while, like $36 an ounce Australian. That was a good return if I had have held on to it back then. But I also made returns in the shares that I bought with that currency as well. So just be mindful that our lives are going to be pretty different. Everyone's lives are going to be pretty different. So when people are selling silver, they're not necessarily panic selling. Anyway, so gold, as I've said, it's gone up over time, far more reliably, as you saw on the chart that I showed you before. And silver, it's a lot more volatile. When it goes down harder. You can look at it in the daily volatility as well, but it also shows up on the longer term graph. Now, before I let you all completely lose your minds because you haven't seen what I've got here, it is the 30-year 2020 Kookaburra, so 30-year anniversary, 2 ounce gold gilded silver proof high relief on a sesame seed bun. They've got such long names now. Again, just to remind you, if it's got a capsule, feel free to take it out. You don't need gloves. If you've got coins, they don't have capsules. It's advised, highly advised, especially by me, to make sure that you are wearing gloves, especially if they are coins you want to sell later. There it is. That's the 2020 30th anniversary Kookaburra. I love this coin. It's fantastic Perth Mint production. Majority of what I have is Perth Mint. I just really love the quality that comes out of the Perth Mint. So that's what's in the box today. Basically, every video I do, I will do a what's in the box, and so that's what's in the box today. Sitting on a corrugated tin roof. So I hope that helps some of you out there understand when you're making your purchases into the future that it's really important to have both gold and silver in your stack for differing reasons. Just like in the investing world, it's good to have a range of different investments. In terms of real money, it's also very helpful to have varying types. Obviously, these are both numismatics. They're not generics. They're not just simply bullion coins. So they're always premiums and niche market sort of stuff, these ones. And that's mostly what I'm going to be showing in the first little while, just talking and showing some of my more enjoyed pieces. I really do like these. Back in 2017, when the gold price was just being absolutely hammered, and silver even worse so. But that's when I purchased these. They were 3,000 Australian dollars from the mint, or like 2,995 Aussie dollars. And well, I managed to pick these up. Someone had obviously bought them, thinking that, oh, these will go up in price. Gold got hammered because this is a 2013 release. So gold was still, well, let's have a look. Gold was still doing pretty nicely up there at $1,600 an ounce in the US. So, it hadn't come off yet. But fast forward 3 years or so, 4 years, and someone obviously needed to sell it. It's a good example that someone they bought it, they thought it was going to go up. It didn't, but something came up and they needed the money. And I was able to pick a few of these up, actually. There's only 250 of them. But managed to get this one for about 20. Not sure if that would have come through on the video, but that's what real life gets like, hey? Just had the doorbell ring in the middle of my recording. Anyway, so what I was talking about, I think, was, yes, I was able to pick this up for substantially less than what it was worth from the mint. And sometimes that does occur. Sometimes it's a bit good luck, or a bit of a blessing in that regard. But others had come up with a reason why they needed to sell it, obviously. And that's what precious metals does get like. But as long as we're understanding that it's not an investment, it is real money that is in your savings. It's something you hold and you control. And that is the reason to be holding it. If you don't hold it, you don't own it, is a really good thing to remember. So that's really all I wanted to talk about today, was just to help understand the differences between the two. I haven't talked about platinum today. I've only got a little bit of platinum. I am certainly looking at expanding on my holdings of platinum because the price is quite heavily suppressed. And perhaps I will just mention this. I know this video is starting to get a little bit long, but I will just mention that there's a bit of a difference here, and that is that while silver is money, it is also very much an industrial metal. And part of the reason why the price is suppressed, and make no mistake, it is suppressed, it is held down, is just that. It's so that it's not too expensive. There's a lot of other channels that will be able to help you understand why it happens. I'm not going to cover it right now, but my thoughts on that, though, is especially generic rounds and silver from other countries, the Austrian Philharmonic, the kangaroo here from Australia, kookaburras, anything where the premium isn't stupidly high. United States Silver Eagles, oh my gosh. And there's some others that are pretty high up there too. But in the scheme of things, when we're comparing prices at the moment with those sorts of coins, just bear in mind that silver, if we were going to understand its full intrinsic value and the value that it really should have in relation to how scarce it is, how difficult it actually is to have in large amounts, if you removed the false price discovery from the paper markets out of the equation, silver would not be $18.57 an ounce US. Absolutely not. And that's why, while you've got, it's a good idea to have gold, it is a fantastic idea to have some silver, whether it is the longer term holding, whether it's a trading holding where you buy it in its lows and you sell some of it when it goes up, and then you wait for it to come back and you rebuy the dip. You can do that a little bit more with silver. I mean, gold too, but you could probably do it a bit more with silver because the fluctuations are a little bit more harsh. But it's important to remember that at some point, silver is going to have its day, and it'll dwarf what gold does in the same time frame. That's my personal take on that. So gold might double, silver could quadruple or better than that quite easily when the price discovery is freed up and people and supply and demand actually dictate its price rather than the paper markets, where there's so much more currency flowing in the buying and selling of contracts rather than the actual physical metal. But that's another topic for another day. So there are differences between them, and it's a good idea to have, hedge your bets, as they say, because it is a hedge against currency devaluing, to have gold, silver, and platinum. And perhaps in my next video I will show you a little bit of the platinum that I've got. Again, it's numismatic coins, but I'm going to be looking at getting into some generic platinum as well, just to add to the stack, to add to the diversification. There we go. But I hope this video is helpful. So we've covered the differences. We've also covered don't heckle people for selling their gold and their silver if they need to. It is their savings. It is your savings. Understand why you've got real money, because savings in currency form in the bank is always being devalued. Any interest you get paid on bank currency holdings, it's far and easily outweighed by the rate of inflation, and it's always been like that. Any currency you've got in the bank is always being devalued faster than any interest you're earning there. Otherwise, the system would fall over. They can't do that. Banks like making money. Anyway, thank you for joining me today on the breakdown. I hope that this video has been insightful and helpful for you. If it was, please leave a like. Please share it with anyone that might benefit from hearing it. Especially if you want to, share this video with other silver stackers that do YouTube channels as well. I'd like to, I guess, be a little bit more involved with the online community in that regard, and I would certainly like to hear some feedback from them. They've been doing the YouTubing thing in the silver and gold type stuff for longer than me, but I've been stacking for a good 10 years, so I'm sure there could be some good conversations there, and maybe a few debates along the way. If you've got any comments, please leave them in there. I would like to cover them in future videos. And if you would like to also subscribe to my channel, I would greatly appreciate that, and then you'll not miss any of the content that I come out with at a later time. Thank you so much. God bless you and your families, and until next time, bye for now.